Let's welcome on board Nimesh Chandan, the Chief Investment Officer at Bajaj Finserv Asset Management. And Nimesh, good afternoon. Thanks so much for joining us. And first up, give me a quick view on, give our viewers a view on what you are making of the market momentum right now. Because, 6 consecutive sessions of gains that we've seen before today. Do you believe that today's move is just profit booking and that this bullish momentum can continue? Or do you believe that, this gaining rally was short-lived and we are once again headed for the kind of correction that we were seeing a couple of weeks ago?
Hi, good afternoon, and happy to be on your show. Let me just split the market in terms of different views that we have. So, when we look at, say, the Nifty, uh, through fundamental valuation, we come to a value somewhere around 24,700 for Nifty. So, this kind of a bounce, I think, was expected since the market had gone to severe lows below that. Second, if you look at, we track certain behavioral indices which tell us the mood of the market. Markets generally don't like uncertainty, and mainly because of the tariff talk and the flip flop on the tariffs. Actually, markets were uncertain. They were reacting to news headlines. Now, finally, there has been some positive news flow and positive progress on that front, at least for India. And that has given some confidence to the market on that side. Third is when you look at technically in the market, and some of the indicators that we track internally were showing a lot of stocks within large caps, mid caps, and small caps were actually in oversold zone. So they were actually ripe for a bounce. Now, from here on, we believe that this year will be a year of large cap and a year of quality. So we believe that the bounce that the market is seeing for the rest of the year, at least the large caps will remain buoyant because the valuations are attractive there, the risk reward is attractive there. And quality as a theme, because companies with high quality balance sheets and good quality management should be able to weather the storm this year better than the others. So we believe the large cap and the quality space is where investors should be this year.
So large caps is the way to go. Thanks for that view coming in. Also, I was just looking at your fact sheet, Nimesh, and I noticed something very interesting, wherein you mentioned that the markets are going to underestimate the ripple effect that the consumption space can create for us. You also have a consumption portfolio with names like Trent, M&M, InfoEdge, ITC. So tell us what's the outlook on consumption going ahead, especially now that the budget boost has been announced and it's almost time for that boost, that 1 lakh crore boost to play out now. So what are you making of the entire consumption space going ahead?
Multiple things are working in favor of consumption, and I believe that we will have a good decade run in terms of consumption growth. And India's big story is actually consumption. When we look at the changes in fiscal policy and the budget that you mentioned, it has given the boost to the demand side, to the consumption side through tax benefits. And it will lead to a multiplier effect because don't just think about the 5,000 or 10,000 rupees a household is saving and they spend that much. It's actually in terms of EMIs that you have to think that actually with 5,000, 10,000 extra EMIs, what can a household afford? So it can have a multiplier effect there. Second, you see the monetary policy. It has eased liquidity in the market. It has also cut interest rates. And we believe that from here on, if inflation doesn't surprise negatively, we should be seeing more interest rate cuts coming. That should also boost consumption. The third trigger that can come is in January 26, when we have the eighth pay commission salary revisions for government employees. And typically that also leads to a boost on consumption. If you look at the valuation in this space, and here I'm not only comparing FMCG, but I'm comparing everything from daily groceries to real estate. Many good companies with strong brands, good balance sheets, good return ratios, good cash flows are trading at attractive levels or below the average valuation that they have enjoyed. So this gives a good opportunity for stock picking in this space with the comfort that there's a long runway for growth and valuations are attractive.
Right. Hi, Nimesh. Good afternoon. Cheryl also joining in the conversation. I wanted to get your view then. You did speak about the markets, you did speak about consumption space. I wanted to understand about all-time good old favorite banks because now everyone is touting that this would be a leader. But do you think that it will continue to sustain that momentum going ahead because the valuations have reached the reasonable levels? But we've seen a lot of buying also take place.
We have more selective positive view on BFSI. First, if you look at the valuations, I think valuations are attractive for almost the entire space, whether you look at private banks, public sector banks, and many of the NBFCs in the segment. However, we have to go selectively in terms of the metrics of growth, net interest margins, and asset quality in these companies. We are a little more biased towards private banks, but even some of the large PSU banks look attractive in terms of growth and valuation for this year. Yes, we have to wait for a certain trigger to come in terms of growth for these companies. So maybe we wait for a quarter or so. But valuations are attractive, good companies to pick up from, and triggers are there. In terms of NBFCs, they get directly benefit coming from the cut in interest rates. So liquidity improving, interest rates going down, they will benefit on their borrowing costs. However, in terms of on the lending side, on their asset quality side, we have to look at each segment differently, whether it is a gold financier, whether it is a MFI, whether it is a consumer lending company. We are positive on consumption, so consumer lending is positive view for us. We are also positive on gold lenders, but MFIs, we believe there is still a little more pain left in terms of changes in regulation, and certain higher loans that were given out may create some problem or stress for some time before they start moving up.
Looking very good for the MFI space right now. Also, Nimesh, want to get your view on the healthcare, diagnostics and pharma space overall, because we're just days away from that 2nd April deadline coming in, where we're expected to see some impact from Trump tariffs playing out for our markets. I have some holdings from your healthcare fund over here. How are you going to position your holding in pharma if we see any impact from these tariffs? Are you looking to change some holdings, some stance, some weightage? What's your outlook on the entire pharma pack, and how do you expect to play it post 2nd April?
So while I said we believe that consumption is the best play in terms of the longer term, say for example 5 to 10 years kind of a story, this year healthcare is expected to do very well. Whether you look at the domestic market growth, whether you look at contract research and manufacturing, whether you look at US generics, diagnostics, hospitals, everywhere there are triggers available. The beauty of this space is it is so diversified within itself. So each pharma company also based on different therapeutics, different markets that it is targeting, different plants, different the areas that it is focused on R&D. You see there are many diversified plays available here, but overall the space has some triggers. One, domestic market is growing very well. We believe that contract research and manufacturing will really pick up well from this year onwards because of China Plus One kind of strategy, Biosecure Act coming into play or influencing decision making for the longer term. And third, a lot of products are actually going off patent from here on to till 2030. So that gives a big opportunity for Indian companies to crack these big molecules and introduce them in their generic version in the US, Europe, and the rest of the world market. So this year, healthcare likely to see good growth, both in revenues as well as profits. Yes, stock picking within these segments need to be on a bottom-up basis because of the unique business models of each company here.
Right. Nimesh, let me come to you and ask you about a field where you specialize in and you understand better, that is behavioral finance. Now, we've had a lot of, you've seen actually the retail investors being tested right from the start of the year, just before the start of the year. Now, do you think that there is a change in the behavior? There was a time when people were going all out into IPOs. Now, I think there will be most likely a step back at that, because also you won't see companies come out with IPO with that fun and fancy and fair right now. And also about SIPs. How has all of this actually impacted the investor sentiment? What are you actually reading out from it? And do you think that we will actually see better days ahead, especially when you talk about investor sentiment?
So this is a very interesting question. And actually, 6 months back, the conversations I had were very different from the conversations I'm having with investors, say, in the last month or so. About 6, 7 months back, when markets were doing very well, there was a certain recency bias by people that they thought that the past returns that they have made 1 year for a year or so will continue, and people looking for high beta bets, people believing any narrative that was given to them, valuations did not matter. And so many times I heard people coming on television and people in the conversations also saying that this is India's decade. Now, 6 months with this correction that has come in, especially more in small caps and mid caps, suddenly people have become very fearful, and people have become very worried. Instead of talking about India's decade, people are worried about the foreign flows or liquidity flows in the next month. Also, the problems or dangers that were risks that were seen earlier, people used to trivialize them. Now, even if there is a low probability outcome, people start giving it higher weightage in their decision making. And that's a typical characteristic of fear that comes in. It is important, as one says, for a long term investor to be greedy when others are fearful and fearful when others are greedy. SIPs especially, it was a bit disappointing to see many SIPs shut down during this time, because this is where SIPs work best, where you are able to average into your investments because of this fall in the market. And SIPs are made for this kind of a market. They are a kind of discipline that take you towards long-term wealth creation and take advantage of the volatility. And if you're scared of volatility and stop SIPs, then it starts becoming you may not reach the financial goals that you had planned for. Hopefully, once the market stabilizes here, I think people will renew or resume their journey on wealth creation, because Indian markets have over the decade or so. So I think once markets stabilize, this fear goes down, the uncertainty goes down, people may come back.
Yes, absolutely. And hoping that is actually sooner than later and people find new jewels and gems in this market, given the fact we've seen a sharp churn. Thank you so much, Nimesh, for joining us on the show to talk about that.
If you like this video, then like, share and subscribe to ET Now.